Trading with the trend is probably the most efficient method to profit in any market. In this video, we're going to talk about an awesome indicator that can be used to filter out the majority of the false signals produced when trading. If you find value in this video, remember to leave a like. Let's get into it. Now, this indicator is called Regularized Moving Average Oscillator. To add it to your chart, you're gonna go to TradingView, and then you wanna select any trading security that you like. As for the time frame, you wanna choose anything in between 5 minutes and the 4-hour time frame. For me, I'm gonna go with 15 minutes. Then access the indicator search tab, and then type in Regularized Moving Average Oscillator, and select this one by Quantilux. The Regularized Moving Average Oscillator is a comprehensive trading tool designed to offer deep insights into market trends and dynamics. It calculates the moving average based on user-defined parameters. These include the length of the moving average, the type of the moving average, and any custom smoothing factors. Now let's go over its key features and functionalities. This line in the center is called the zero line, and it serves as the central axis point for this indicator's analysis. These upper and lower levels are the overbought and oversold levels. And then we have this line that changes color between green and red. This is called the Z line. I know that because it's written right here. As you can see, whenever I toggle this on and off, it's the one that gets affected. When the Z line goes into the upper red level, that indicates that the market might be overbought. Conversely, whenever it goes into the lower green level, that indicates that the market might be oversold. These green and red dots inside the oversold and overbought levels are called reversal point bubbles. The green one at the bottom is the bullish reversal bubble, and the red one at the top is the bearish reversal bubble. And as you can tell from the name, they are used to indicate potential trend reversal points whenever the market goes into the overbought or oversold levels. Now, there are several ways that we can use this indicator to trade. The first method is using it as a trend following strategy. This basically means that you would be looking to enter a long position whenever the Z line goes above the zero line and changes its color to green, like it did right here. And then to enter a short position, you would wait for the Z line to go below the zero line and change its color to red. Of course, this is a very simple strategy, and you would still need extra indicators and some price action concepts to make it super profitable. However, for now, we will go over the second method that can be used to trade with this indicator. But before that, let's talk about hankotrade. Now, you may be thinking, and what exactly is hankotrade? Well, hankotrade is one of the most reliable forex brokers out there. For that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold. And up here, you can see that this is actually a live account. The reason why I love hankotrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? hankotrade offers up to 500x leverage. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So in total, you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. The second method of trading with this indicator involves using it in a mean reversion strategy. Mean reversion means returning to the average, which means whenever the price extends too high, it tends to come back to the average. If it extends too low, it tends to come back to the average. It's basically buying at oversold levels and selling at overbought levels. So like here, the market was oversold, signaled by this green reversal bubble. So we enter a long position. And then here, the market was overbought, signaled by this red reversal bubble. Because of this, we enter short position. Now let's access the settings of this indicator and customize it for the strategy we're going to showcase in this video. On the Inputs tab, change the length to 10 and the regularized length to 20. After that, click OK. Then open the Indicator Search tab because we need to add one more indicator to the chart. Type in SuperTrend and select this one by Everget. Double-click on it to access the settings panel. Then on the Inputs tab, change the ATR period to 30. For the ATR multiplier, we're going to change it to 5. Then on the Style tab, disable the Buy label and the Sell label and then click OK. Now, this strategy uses these two indicators, but we're also going to add a price action confluence where we will be looking for either a break and retest of a support or a resistance level or a strong rejection of a support or a resistance level. Let me show you an example. To enter a long position, first we need the market to be in a bullish trend. To confirm that, we're going to use the SuperTrend indicator. We need the SuperTrend to be colored green and the price should be trading above it. This indicates a bullish trend. Second, we need a pullback to happen within this bullish trend. To confirm that, we need the Z line of the moving average oscillator to change color from green to red and then back to green. This indicates a market pullback. Third, we need the pullback to last a minimum of 5 candles and a maximum of 10 candles. So basically from here to here, we need the candles that correspond to this red area to be between 5 and 10. For this trade example, we can see that we had 7 candles, which makes this setup a valid setup. Now, our entry candle is going to be the first candle that corresponds to the first green area on the moving average oscillator. This is the first green instance, and this is the corresponding candle. Then, to make this strategy super profitable, we need to add our price action confluence. So once we have our entry candle, we need to take a look at the price structure. We need to see a clear resistance level and the price needs to break and retest that level just before the entry candle. If there isn't any resistance level, we could also focus on a support level and we would need the price to reject off of that support level just before our entry candle. For this particular trade example, we can see that we had this pretty strong resistance level right here, and then this is the break of that resistance level, and then the price did a retest of the level. This break and retest of this level is going to increase the probability of the price heading in the direction of our trade. All our entry conditions are met on this candle, so we're going to enter a long position. We're going to set our stop loss right below the resistance level, and then for the take profit, we're going to set it at 2 times the risk. We let this trade run and take profit. Now here was another long example, but instead of a break and retest of a resistance level, the price actually bounced off of a strong support level. The indicator signals remained the same, as you can see right here. The market was in a bullish trend as indicated by the green SuperTrend indicator, and then a pullback happened when the Z line of the moving average oscillator changed color from green to red and then back to green. There were 8 candles within the red area of the oscillator, which falls within the desired range of 5 to 10 candles. The indicator signals were complemented by the fact that there was a strong support level right here. The price bounced off of this support level just before the end of the pullback, setting up for a long trade. The stop loss is going to be set right below the support level. For the take profit, we're going to set it at 2 times the risk, letting the trade run, and it hits take profit. Now here's an example of a short trade. First, the market was in a bearish trend as indicated by the red SuperTrend indicator. Second, a pullback happened within this bearish trend. How we know this is because the V line of the moving average oscillator changed color from red to green and then back to red. We can see that this pullback lasted exactly 10 candles. So basically from here to here, this green area covered a total of 10 candles, which is within a range of 5 to 10. Our entry candle is going to be the first candle outside of this pullback. So the first candle that corresponds to the red area just after the pullback. That is going to be this candle right here. And then looking at the price structure, we can see a very clear resistance level right here. And then the price did a retest of that level and then bounced off it just before our entry candle. This is gonna increase the probability of the price heading in the direction of our trade. All our entry conditions are met on this candle, so we're gonna enter a short position. The stop loss is gonna be set right above the resistance level. For the take profit, we could go with 2 times the risk. We let this trade run, and it hits take profit. In summary, the moving average oscillator is a powerful tool that can be used to identify market trends and potential reversals through its detailed analysis of price movements. By combining this indicator with other technical trading tools as well as price action strategies, traders can enhance their decision-making process, increase the accuracy of their predictions, and optimize trade entries and exits. If you're interested in this particular trading indicator, you can check it out on TradingView and see what other settings and strategies you can come up with. That's basically it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.